Just going to share screen. Okay, perfect. So first things first, my name's Daniel Gurr. I'm one of the consultants here at Quantico Group. For those who are wondering who Quantico Group are, we are a multi-asset class introducer working with high net worth and sophisticated investors, specifically focusing on being the bridge between the product and the investor. In terms of different sectors that we work within, renewable energy, technology, AI, infrastructure, sustainability, which is going to be the topic in conversation this evening, as well as ESG as a big sector that we work within as well. In terms of the types of opportunities that we tend to bring to the table, it's not something that you would otherwise face with a generic financial advisor and wealth manager, which we are most definitely not. I'm very proud of that. We are an introducer purely serving opportunities to investors based on the macro backdrop. So we effectively look at things via a big picture lens to really try and determine where the puck is headed. Now, for those that know me, will now understand that, that's always been our approach to really understand where the big capital, big liquidity is being pushed into, and then really understanding the bottlenecks. So if we look at the macro backdrop being the big picture, and then obviously the micro backdrop would be the companies, the opportunity that fits inside that backdrop. So with renewable energy, a good example of that would be entities that have pioneered technology to effectively solve the issue of the production of renewable energy. And then obviously what we're speaking about this evening, plastics. Very harmful, massively impactful on the environment, traces within human bodies, traces within newborn babies, microplastics, petrochemical plastics are showing up absolutely everywhere. Government intervention is obviously pushing big businesses based on regulation to be more sustainable on consumption in plastic or on plastics. But the biggest problem that you've got is that there's very few players out there that can actually provide a solution to that problem. Very few players out there that have actually got the technology that can be deployed at scale that's affordable for these businesses. So we're really focusing on areas and companies that are that bottleneck that stand to benefit from capital inflow. So that's going to be a lot of the conversation this evening. Obviously, just to touch base, a bit of housekeeping. The views expressed this evening are purely my own. This is for informational purposes only, not financial advice, and obviously capital is at risk. Okay, just to start things off. So Teysha Technologies, they are a fully biodegradable plastics manufacturer. They are fully operational, post-revenue, post-technology. So the technology that we're speaking about this evening and the technology that they have patented is actively being used by multi-billion-dollar brands and conglomerates globally. Okay, I did want to share a few different stats with regards to the company themselves. Okay, just before we do start. So like I said, fully operational technology company, producing fully biodegradable plastics, patent technology, okay. Partner with the likes of L'Oreal, one of the largest cosmetic distributors on the planet, actively producing fully biodegradable plastics in their headquarters in Paris as we stand. Various other partners and negotiations with regards to adding further partners, one being one of the largest packaging companies in the States, who they have entered partnership conversations with. And this is all information that will be released over the coming months and over the coming years. Obviously, the focus and objectives for the business is to increase these partnerships. In terms of performance, past performance, the company has gone from £1 per share. Investors were purchasing shares such as £1 per share back end of last year, and the company now is trading at £2.80 per share. So 180% uplift on the share price. Obviously, past performance is no guarantee of future performance. But I think what you'll really take from this evening is that this sector, in terms of the size of it, is just a tip in the iceberg compared to where it is now, compared to where it's going to be over the next couple of years, 5, 10, 15 years plus. The sector is only getting bigger and bigger and bigger. Okay. In terms of product and production partners, you've got Integrity Biochemical in the US. You've also got Aran Chemicals and Almac Group, okay, all major entities within the sector. Development centres across the UK, Europe, and America. In terms of industry recognition, for those that don't know, they a couple of months ago, they won the Innovators Award in America, okay, which was called the Hill Prize. They received £500,000 of prize money, okay, which was non-dilutive. In terms of forward-looking projections of the company, anywhere between 20 to 25 million pound. These are purely forward-looking projections, but we'll go into those in a couple of minutes. In terms of the market scope, we spoke about the bottleneck. So all businesses, legislation is definitely pushing businesses to become more sustainable. But the problem you've got is there's very few businesses out there that can provide that solution. That's the key, okay? Supply and demand is obviously going to be the single most important factor of any investment vehicle. And obviously when you've got those two dynamics at play, that's where you tend to see outsized returns from previous experience. So without further ado, we will go into it. Also, just to touch base, questions will be answered at the end. We do tend to get a significant amount of questions, as you can appreciate. So I'll try and get through as many of them as I possibly can. But please don't be disappointed if I don't get to your question. You can either speak to your consultant or email us directly, and we will get your questions answered. Okay. So this is one of the largest material transitions in history, okay, in terms of the material of being non-biodegradable plastics into fully biodegradable plastics. The plastics market, as you can see there, it's a $600 billion market. In terms of ESG, environmental social governance, so 90% of legislation of businesses now are focused on being ESG approved or compliant, which is environmental social governance. It's a $30 trillion market, forecasted to hit a $50 trillion market by 2030. So if you just think about the scale of the market in terms of forecasted growth over the coming years. Like I said a couple of moments ago, the regulatory pressure is, it's not a luxury, and that's probably what some clients or any investor individuals probably thinking, okay, it's all well and good if we can be more sustainable in terms of consumption on plastic. But it's, is it going to be costly? Is it going to be feasible for businesses? This is very, very important that, this particular solution is scalable and is being scaled, as well as obviously it being price competitive. Okay, like I said, ESG is projected to hit a $50 trillion market cap by 2030, one of the largest, if not the largest. Institutional capital, we have these conversations on a regular basis, whether it's ultra high net worth, family offices, venture capital, private equity. We cover a lot of those sectors, and we can tell you from our own firsthand experience that big capital is migrating into this sector at a rate of knots. Okay, again, a big push. The main tailwind of that, is sustainability mandates, which is obviously driving that allocation. In terms of the plastic sector, so you've got a $600 billion industry, which is undergoing forced change. That was the point that I wanted to add earlier before. It's not a luxury, it's essential, okay? Governments are requiring businesses to do exactly what we're talking about today, okay? So this isn't a luxury in terms of businesses being more sustainable, it's essential, okay? 430 plus tons produced of plastic on an annualized basis, and 10% of that is recyclable. Okay, waste is obviously projected to triple by 2060. So what I'm trying to do here, for all of those that are wondering, is try to give you and quantify how big of a market this is and how big of a problem it is. Okay, because then that will really make sense in terms of the big picture view or the big picture lens that we're looking at things through, i.e., how big is the market? Is it right for change? Is it right for growth? And you'll see, as obviously we're going through at the moment, that it very much so is. And then obviously the micro picture, we will talk about the technology and where the guys are at in terms of Teysha and milestones. Okay. Obviously, we've spoken about regulation is forcing change, BPA being phased out globally, EU and global plastics restrictions in terms of single-use plastics has already been implemented. corporate ESG mandates are rising, as we've discussed already. Obviously, as we've discussed, plastic is no longer sustainable. $120 billion worth of packaging value is lost every single year. Environmental and regulatory pressure is speeding this up. And then the no scalable replacement in terms of historical solutions. So we've spoken about, obviously, how big the market is. We've spoken about the problem. And this is effectively where we will now speak about Teysha Technologies and how they provide a solution to that problem. Okay. They're obviously positioned at the intersection of all of this with regards to sustainability and advanced materials. And obviously the regulation and driven demand is effectively where they look to play in the midst of all of this. Like I said before, generally speaking, with EIS opportunities, or maybe opportunities that we've spoken about in the past, it's been about the entity building their technology, hence why they're raising capital. With Teysha Technologies, they've got 10 years worth of research and development, world-class leadership team. Professor Karen Woolley, for those who don't know, is one of the brightest minds within this particular sector, and she is part of the leadership team. Okay, they have patented biodegradable polymer platform in terms of the actual plastic that they produce. They will be launching one of their main production facilities in Cambridgeshire later this year. Obviously already covering UK, US, Europe presence as it stands, with global manufacturing partners already in place. In terms of the material that they use to produce the plastic, so it's plant-based materials. So think about agricultural feedstock is a lot of what goes into the actual material to produce the plastic. Okay, so it makes it fully biodegradable and fully sustainable. And obviously same, if not superior performance to current non-biodegradable plastic, compatible with existing manufacturing as well. So it's a plug and play. Okay, so it's not as if these large-scale factories, let's say L'Oreal, for instance, have got to reconstruct their warehouses or their facilities. This is a plug and play that fits into existing infrastructure, so they can replace the non-biodegradable platform for the fully biodegradable platform. It's not a reconstruction to their warehouse. They just simply plug and play. As I said, designed for scale in terms of large-scale corporations and businesses. No infrastructure changes required, as we've already discussed. Protected IP, all of this we've already covered already. So I'll just head to the next slide. In terms of the applications, you've got cosmetic packaging, consumer goods, sustainable materials, industrial use. There is also plenty for other areas and industries that they are currently looking at. Patagonia Group, which is a clothing brand, for those who don't know, is also an entity that they have been in discussions with. So that could also be a potential outlet going forward in terms of product production as well. Okay, blue chip validation. So big entities, big corporations are actually using this technology. We spoke about L'Oreal, we spoke about the other engagements with other global brands and the award that they have won. They're also in the running for another award, which we hope to update everyone in the coming weeks as well. So it's a multi-trillion-dollar market. Plastics are worth $600 billion on an annualized basis. Packaging is worth 1.24 trillion. Cosmetics is worth 335 billion plus. Sustainable plastics is 150 billion plus by 2030. I'm just going to pause there so that everyone can actually look at those numbers in terms of the sectors that Teysha Technologies can capitalize on going forward. Okay, we're not talking about a business that has, a multi-billion-dollar market cap. Okay, we're talking about a business that has a valuation in the tens of millions. A slice of liquidity from any of those sectors coming across into a business like this with this market cap sends a share price of a company like Teysha Technologies up significantly in value based upon my own experience. Okay, purely forecasting, but the numbers there, which I'm sure everyone can see the size of the market, the size of the opportunity. A lot of this we've already spoken about, so we will push on through so that we can get to questions and not run out of time. Obviously, very mindful of the fact that everyone is spending their Thursday evening with ourselves. Okay. Again, a lot of this we've spoken about with regards to the research and development and the commercial scale that they have as an entity. Okay. Any questions that you have in relation to the R&D and the technology itself? So happy to cover them at the end as well. Okay. We spoke about the share price growth over the past 6 months in terms of investors that bought back end of last year, gone from £1 to £2.80. So very, very impressive. In terms of the size of the market and the progress that the company's seeing, our forecast, purely indicative, is for the company to grow significantly in terms of both market cap and share price over the coming years. And what we're seeing at the moment, based upon my own experience and my own views and opinions, is that this is just a tip in the iceberg compared to where these guys can be. I mean, I don't want to over-egg the pudding, but we just touch base on some key points in terms of the size of the market. So I'm sure you can validate that and see that for yourself in terms of those numbers, both the previous performance and the forward-looking projections as well. Obviously, in terms of our projections over the coming years, that's what we're looking at, purely based on the numbers, which I'll roll straight into. I'll leave that there just for a couple of seconds longer so everyone can see, obviously, in terms of the forecasts. Just some brief financials. Obviously, further financials can be provided if needed inside of the information memorandum. A lot of that has been outlined. Just in terms of sort of year 3, year 5 targets, you can see how quickly things can increase. In terms of valuations, outcomes, 5 times EBITDA, obviously gets them to £270 million valuation. 8 times, 430, 10 times, etc. In terms of the timelines, happy to discuss any of the forward-looking projections based on the company's valuations with investors as well. Just a brief illustration, like I said, purely illustrative with regards to £50,000 investment. Current entry price would purchase you circa 17, just under 18,000 shares. Obviously, if the company got to the £10 per share price, obviously that would provide a valuation of £178,000. And then obviously you've got the second scenario that you don't need me to cover. You can see that all for yourselves. Okay. Purely illustrative in terms of our forecast, like I said, but happy to go further and more intricate into those numbers as well, which I'm sure a lot of the consultants can discuss, or I'm happy to discuss with investors as well. In terms of the tax efficiency, this is definitely something that I wanted to touch base on. Majority of high net worth and sophisticated investors that come knocking on our doors, I guess the main pain point for a lot of investors outside of poor performance is very much so tax exposure. Although I'm not an accountant, we do work with a lot of EIS approved investment opportunities. The Teysha Technologies offering is EIS approved. Now, for those that don't know, EIS stands for the Enterprise Investment Scheme. It was first brought into play by the HMRC back in 1994. Its sole purpose is to boost economic growth within innovative sectors, so areas that the UK government wants investment and growth within. So think sustainability, renewables, cancer research, biotech, AI, technology, areas that the government wants advancement within. In terms of the tax benefits, purely for UK taxpayers only, okay? However, you do receive 30% of your initial investment back against tax relief or offset against your tax exposure, depending on the financial year that you are claiming. And then after 3 years, there is no capital gains tax or inheritance tax, which is very, very key. If you're anything like me with the recent tax changes, and it seems every budget there is another slice of our pie that is being deducted based on tax. The EIS has been one of the most tax efficient initiatives and probably remains one of the last bastions of tax efficient enterprise in the country, the business in this country. So for those that do have tax exposure, whether it's income tax, or those that do have tax exposure, whether it's inheritance tax efficiency that you're looking at, or capital gains tax efficiency that you're looking at, this is definitely something that all investors should be looking at and should be definitely educating yourself on. You've also got something called capital gains tax deferral. There is a little bit more detail with regards to capital gains tax deferral, but in essence, what it means is, let's say, for instance, you are liable for a capital gain in another asset class, whether that's a sale of investment property or some stock. Because you've made an EIS approved investment, you can defer. It's not a relief or rebate similar to what you've got at the first part in terms of this part here, 30% income tax relief. It is capital gains tax deferral. So you're deferring a proportion of that capital gains tax that is owed. Okay. However, you can defer it indefinitely. In terms of the exact numbers, it depends on the capital gains tax bracket, and it also depends on the amount of capital gains tax that you're paying. But of course, it would make sense to speak to your own independent accountant to understand further about that. Okay, but like I said, with Teysha, it is EIS approved. So you've got the 30% that comes back to you. So that's outside of the performance. It's not leaning on the performance of the company, whether the shares go up or go down. You do get the 30% back as long as you pay the equivalent amount in tax. This is unfortunate for ourselves, the last and final round of EIS funding for Teysha Technologies. Okay, so in terms of the allocation for this final round, it has not gone live as yet. It is an EIS round. Okay, the share price will be going live at around the £2.80 per share mark. Okay, and obviously allocations will be received purely on a first come, first served basis. We've spoken about early adoption, where these guys are at the moment. Yes, of course, the share price increase has been impressive, but from my point of view, it is nothing compared to where these guys are going. Okay, call my bluff, have a look at the information, jump online, type in Teysha Technologies, award-winning company, and you will see that these guys are a major player in the technology sphere right now and creating a huge amount of noise. So I do believe that they do demand and justify not only an investment, but the research to really understand exactly what they're doing and why it's so impactful. And I think they're very much so doing that at the moment, especially for existing shareholders. Thank you very much. Really appreciate everyone's attendance this evening. We will now turn over to any questions that anybody has. Like I said, I'll try and get through as many questions as I can. If I can't get through all of your questions, I would insist for you to either speak to your consultant or send us across an email so that we can get that answered. Okay, so just bear with me one moment. I'm going to stop sharing so I can move to the question section. So just a show of hands to confirm that everyone can still hear and see me all okay. Okay, great. Okay, so I've got a question here. Anonymous attendee. How does the war affect a company like Teysha? That's a really, really good question. I think it affects a company like Teysha positively, because what it's effectively showing us that imports can be disrupted, or the imports with regards to goods whether it's materials for products that might be non-biodegradable or fully biodegradable, can be disrupted via supply and food chains. With the Strait of Hormuz being closed at the moment, that's obviously putting a massive impact on fertilizers, on oil, on gas, on goods that we rely on and depend on. And you're seeing that here in the UK, that is very impactful. So I think it impacts a business like Teysha positively because they can produce goods in-house, i.e. in the UK, and they can deploy them at scale and economically as well. So from my point of view, it's a very good question. It's definitely something that I would like to go away and have a further think about. But my direct answer to that would be positive, purely based on the UK now being more focused towards being more independent with regards to the production of our own products and goods. And if we're taking a agricultural feedstock or something that can be recycled to produce fully biodegradable plastics, well, that's economically friendly, because if it wasn't fully biodegradable or if it wasn't recyclable, the argument would be there is that it's way too costly, hence why we have to rely on other areas to import these materials to produce these plastics, i.e. China. Another question, how many shares are available? It's the final last round, so very thin pickings, but we will be releasing that as of 10 o'clock tomorrow morning in terms of the exact number. Okay. So another question I have here from Robert, why is this happening now? So I think if you're leaning towards the build out towards sustainability, I think what springs to mind is the awareness via technology of the impacts that petrochemical plastics are having on humans, which obviously, like I said at the very start, we are seeing traces in bloodstreams, we are seeing traces in newborn babies. Also, not to mention the impacts that it's having on our oceans. So it's something that's becoming very much so more aware of now, because we're feeling these real world impacts, and obviously, climate change as well. Next question I have is from Rebecca. Can I access EIS as a non-UK tax resident? The answer to that question is unfortunately no. This is just for, you can buy shares directly in the company outside of the enterprise investment scheme, but you will not be eligible for the EIS tax benefits. Next question I have here is from Lincoln. Is this still early enough to reward shareholders? Look, I don't want to sort of be a bit of a yes man to these questions. I think the information I've shared this evening, I mean, my direct answer is, yeah, I think it's still very early stage. Risks have come down massively because they are post-product built company, and they're also post-revenue rather than being a pre-revenue, pre-product built company. Those risks have come down massively, but this is still very early stage. It's not the finished article, but the fact that they're partnering with entities and they're deploying their product, their technology, and producing these plastics should give a heck of a lot of confidence, because with the EIS benefits, you're basically getting your cake and eating it, rather than just backing publicly traded sustainable business or plastic businesses. You've got the EIS advantages, which brings one's risk down or mitigates one's risk significantly more than just buying publicly traded companies. The next question is, does Teysha plan to, that's from Andrew, does Teysha plan to IPO in the future? Alternatively, what are the exit options? So yes, the company does plan to IPO. A target would be the AIM market. The exact timeline on that hasn't been confirmed as yet. In terms of other exit strategies, you would be looking at a trade sale. This is, like I said, a very sensitive sector. It's hot in terms of M&A. You will see these big businesses look for plug and plays for them to, amalgamate or acquire an entity like Teysha Technologies into a multi-billion-dollar player like L'Oreal. It doesn't take a lot for them to do that. But what that would mean to the bottom line for an entity like Teysha is exponential growth. Next question I have here is, surely this is a luxury for businesses to use and deploy? That's a really good question. We spoke about the economic viability and the scalability of their product being competitive to non-biodegradable plastics, which would definitely mitigate the headwind of businesses not being able to use it. But like I said, this is not a luxury because, like I said at the start, 90% of corporations now have ESG mandates. So that is how these businesses, an ESG mandate is effectively how a business is being sustainable. Okay. And the reason why they have those mandates is because of government intervention. They're forced to do this. Next question I have is anonymous as well. What is the shortest period that we can exit with a profit? If so, with how many percentage profit? So obviously the forward-looking projections is what we've provided and can provide further information on that as well. In terms of timeframes, obviously, if you did sell inside 3 years, you wouldn't be eligible for the EIS benefits. Okay, but you are buying equity in a company, so there is flexibility there. It's not a debt-based product. You're buying shares in the company via the enterprise investment scheme. Okay, we have a question here from Lee Burdett. Has there been any interest from the automotive industry? That's a good question, Lee. To be honest with you, I don't know the answer to that off the top of my head, but I'm sure there has been discussions into that particular sector. I know there was a partner that they were in conversations with in the back end of last year. So you've caught me on the hop a little bit just with regards to that question, but I will come back to you. I think the best way to look at these things is all industries are relevant to something like this because all industries, I mean, I was speaking to a client earlier today and they said, back in the day, glass bottles, well, you have petrochemical plastics inside glass. So I don't want to digress and skip around your question, but my direct answer to that would be, I'm not sure if there's actual ongoing partnership conversations. If there's not, there will be. I hope that answers your question, Lee. Okay, guys, I have 674 questions. Okay, we have an attendance of 3,876, 75 now attendees this evening. So I'm going to struggle to get through all of the questions, and I'm just mindful that you guys are joining me on a Thursday night. So I'm going to take a couple more questions. Okay. The next question that I have is, what is the maximum time frame that I can hold my shares for? Look, ultimately, that's up to you. If there is a buyout with regards to a trade sale, the multiples that the company will be selling at will be very favorable. If the company or when the company does list on a public exchange, you'll be able to hold those shares as long as you feel relevant. Okay. The way I look at these things, the longer you hold in terms of my own personal portfolio, generally speaking, that maximizes performance. Now, that might sound like a pretty obvious phrase, of course, the longer you hold an investment, but I guess not always. I think with opportunities like this, it not being the finished article, the growth forecast going forward, from my point of view, and the data suggest, is significantly higher than where we are at the moment. And opportunities like this are very few and far between. So from my personal opinion, I never want to be too quick to sell shares in companies like this. And I don't want to sort of use plural because, like I said, they are very few and far between, especially with what we're talking about at the moment. It's very hard to get an EIS approved opportunity with an entity that's as advanced as what Teysha Technology is in terms of where they are at along the track of their journey. Okay, so ultimately you own the equity, so you can decide when you want to sell. Okay. Okay, the last question I have is, what's the maximum amount of shares that I can secure? So normally speaking, we look at maximum investment levels of £250,000, or Teysha look at maximum investment levels of £250,000. Due to the limited amount availability at the £2.80 per share, I would probably say that it would be half of that, okay, with minimum starting at £20,000. Okay. I will take the last question. When is this allocation going live? So we are going to go live likely tomorrow. So if you want to be a part of this, and thank you for that question, Ryan, by the way. If you are looking to be a part of this, I would definitely invite for you to email your contact with who you've been speaking to about this opportunity to formally register your interest. We are likely to go live with this last round of allocation, EIS allocation with Teysha tomorrow, okay? So please email the contact that you have if you do want to formally register your interest. For those that do miss out, we will stay in contact and keep you in the loop with regards to other opportunities. But please, I've had various different conversations in the past where clients have sat on the fence, bought time, and then phoned through wanting to make a purchase of shares in other companies. These opportunities don't tend to stick around for too long, as I'm sure a lot of you, if you have been with us previously before, know that it's not a forever opportunity. But guys, I'm going to leave it at that. I hope that was informative. And if there's any questions, well, the other questions that haven't been answered, please feel free to email them through admin@quanticogroup.com or daniel@quanticogroup.com, and I will get those answered. Thank you very much again, everyone. Enjoy your evening. Take good care.